Happy Tuesday, Jonathan.
How's it going?
Oh, it's going well. We've got a break coming.
I know, right? Yeah, we all need a break.
Cannot wait. So happy Tuesday. Thank you, folks, for joining us on this guest captain interview series. We are definitely going to talk about the volatility we had on Monday. Can't wait. Let me just stop sharing this screen here. There you are. Look at you with the hat.
Yeah, I'm on my laptop today, so.
Traveling, yeah, not lucky you. Well, traveling this holiday season for very few, and yet volumes are thin. I don't know what they're doing otherwise, because market
they're watching TV, right, or whatever people are doing nowadays, playing video games.
Well, we're going to play the game of what happened on Monday with that nice volatility surge, and how is my risk-on, risk-off indicator coming, because it flashed yellow 4 days before, and I actually alerted clients and also did a little public service announcement on Twitter that it was flashing yellow, and then Monday it surged 33%. So you and I have been waiting for these types of chop moves, no question.
Yep.
And the first time it bounces, and it typically does intraday, right? Second time it'll cut through it. Most people don't think about that. They don't know that that's coming. So
Yeah.
The first one was
totally
a really nice warning. The next one's going to be real. That's my take. What's yours?
The overnight stuff. I mean, everybody knows how I feel about the overnight stuff. That I like to see it in regular trading hours on heavy volume, and that was a really offsides moment on Sunday night. You know, I mean, in European session, it got smashed. The indexes got hit. I mean, I want to say 3%, 3.5% down on the spike, and then vol just totally spiked the X futures. And so that usually is then faded at the open by options makers. So like they'll fade the VIX at the open because it's such a gap overnight. So that doesn't stick usually.
Yep.
And so it was more of a mechanical thing. If that had been RTH, that probably would have stuck and been a little bit out of control. But I think it was digestion is what we're kind of seeing for the next couple of days until this gets kind of all filled in. And then, yeah, I think you're dead on the money. I think next one's going to hurt.
But the funny thing is, it happened exactly on schedule, right after the largest options expiration of the quad witching in December, right on that Friday. And then boom, just complacency over. But yes, because it was not regular trading hours, it was very quickly bought. But there was a little bit of deer in headlights for a lot of folks first thing. So that was kind of, is this going to be a follow-through event? So what I like is this I had mentioned in my live trading room that we hadn't had, there was another indicator that you're actually building on VigTech for me that showed it had broken for the first time since October 26th. So
Yes.
That's the one where I want to get, it's more of a swing trading alert versus the intraday. But that one, the first time it bounces, the second one, it typically doesn't. I can't wait to see real time how this all plays out with these indicator sets. But that's coming. That's exciting for 2021.
Yep,
but for right
first
now,
part of January.
Yep. But for right now, we had our volatility move, and then the pattern resumed with that intense call buying, extravaganza. Anything that you noticed differently in the past few days since that move on Monday? Anything in the gamma flow market structure?
I think basically what we were seeing towards the latter part of last week on your stuff, you could start to see it faded. So every time it popped in the morning, it was getting faded. And so like advanced decline pops faded, volume pop faded, options pop faded, like everything was getting faded. And that carried over to where it was kind of primed to get cracked. And it did on Monday. You saw that first time that and I posted, I think earlier this afternoon on Twitter, it was like short-term vol spiked yesterday, big time. But 30-day didn't as much, but 30-day was up more today than yesterday, just on the indexes that we track. And what effectively I'm seeing is that this is kind of at the tail ends. I posted a DIA chart a minute ago that you're at the tail end of this because you're seeing the ETFs begin to even shift into a much more bearish position from an option standpoint. So those have been 1+ all week, and then they were on Friday too, so 1.0 plus. And on the like kind of a put call reading, but the single stocks are still, this is day 25 of 26, right? So they're not giving in. And I thought that that would be,
Explain that 25 of 26.
yeah, 25 of 26 straight days. I'll share my screen. 25 of 26 straight days that we've had a plus or a less than 0.60 reading on put call ratio for single stocks. This is 100K premium. Let me pull it back and look at 0.42 on individual stocks, just as anything over $20,000 in premium. So this is day 25 of 26 that has been that reading. And effectively, it's really 26 out of 26 straight trading days that you've seen kind of call buying that's created that gamma loop where just, dealer sells a call, consumer buys a call, dealer has to buy the underlying. So that in the single stock environment has just carried this thing to kind of very dangerous places. And now you're seeing volatility become to be bid underneath. You're seeing the dollar be bid underneath. You're seeing the distribution 100% across the board is happening. If you look at ETFs, just in general, like really quick with just ETFs, it's 1.34 to close the day. So this is a total bearish setup, right? So, I think that you're seeing the shift. If you're not paying attention, right, then shame on you, right? As a trader, can this have the little Santa rally that everybody keeps mentioning? I think for sure on Monday volume, right? And that the gap up on Monday gave kind of some fodder for that to come back and fill in on the VIX. But as implied, like we talked about last week with Vanna, with VEX, now that implieds are rising, you've got that elixir that you needed. And so I think that since implieds are now up, I think that like seeing a huge crack here, we saw one in December of 2018, but it was already in motion in the holidays. So it was kind of the final capitulation was in the holidays.
Yeah.
I don't know that this is going to be like that at all. I think that this could linger into next week, but every time you see it pop, it's getting sold. And these numbers all are in the same boat to justify that. And I'm seeing big puts being bought in the indexes now. And we have not seen that in a while at all. So positioning is changed. And Friday was the huge OPEX you mentioned a second ago. So I think you're beginning to see that shift. These are some major trend change moments. Like, so they may take a little bit of shuffling and back and forth. Like if look at the dollar, this would be the second weekly candle spike down and get bought and come back up if it closes up at a higher watermark this week on the weekly. So I think that takes a little bit more time than a spike bottom and shoot out of it. We could be looking at more of a little bit of a grind just because of the time of year. So it just to see the volatility, what was it, up 35-40% when you woke up on Monday, right?
40%.
Like, yeah, that was that. And I said, this is either going to rage and it's just going to burn everybody in a trash can right now, or it's going to get pushed down immediately, which it did. And, they'll let the short vol has to press, and they pressed, right? But if they don't unwind those positions in the next week, I think they could be really, really painful, because that short vol trade is the one that ignites this stuff. And if they cover, then implieds are just running through the ceiling, and then the whole thing starts to shake. So yeah, you're really close, and your stuff was running hot for sure this week, on Monday. So
there still is the Santa Claus rally, whether it's mythical or not. There is definitely the Stock Traders Almanac with its origins December 24th until the second trading day of 2021. The average S&P gains over the 7 trading day range since 1969 are a respectable 1.3. So hard to short into that. Having
Correct.
said that, we have the Georgia runoff elections on the 5th and the electoral college count on the 6th. So right after the rally. And we've talked about that this is pretty much a chop into the drop for January that you and I are both expecting. And then on top of that, we have, of course, this exuberant, not just call buying, which is lovely, but it makes everyone feel incredibly smart when in fact 88% of all asset classes are up, right? I mean, it's
dramatically. Yeah.
The dartboard is really, 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 really wide. So to me, I see, of course, outliers revert, and typically with a little bit of drama. And we've talked about this every Tuesday. Do you see it yet? Do you see it yet? Do you see it yet? And it's fun because we can stay long until such time as something starts to turn and or break. And Monday morning, that lovely 40% from peak to trough in the VIX was the Tremor. It felt really good,
Yep.
actually. It's like the market needed it.
Well, you know what I said to somebody yesterday, I was like, it really emboldened like when it came off, right? I said it emboldened bad behavior. Like if you were thinking that like, I'm just going to buy this dip, and I got a lot of should I buy the dip messages. And I was like, well, you could buy it, but you got to
depends on the time frame.
Yeah. You got to understand, you're going to move that pretty quick. You need to move it pretty quick. So I think that anybody that continues to think that this is going to just accelerate past where it is, it's that's just going to make it even more vicious when it hits like that. I mean, we've said this for months, is that when it does actually shake, then people are so what will exacerbate it to an extent is that I'm just going to think that it's going to work to buy the dip. And that first real move after this move, they'll buy it again.
So
right? And that's what I think really makes this could get really dicey, because you saw Monday erased, and I didn't say it because I knew that it was going to get bought. I was like, this erased 15 trading days of gains and on some asset classes was when you woke up. And if you aren't, you know what I mean? If you don't understand the market structure concepts, that's 15 trading days, right? That's almost that's like what, 3 weeks?
Yeah.
Gone and hours. And so, that was one beginnings of a move that didn't even crack real levels yet. So we've been pounding the table. I don't know.
But
we'll see.
I have some audio disturbance. I don't know if you can hear it, but I don't think we've been pounding the table to go short, because one of the things I had said last week was I've got like 23 long positions. When does volatility hit, right? So we talked about that.
Right.
So it's you trade with the trend, or in this particular case, the exuberant call buying. Let me just show that real quick because it's intense. Hold on one second. Share screen. So this is definitely what we've got going on here. With, I can't make it larger, sorry, but the call options traded 20-day moving average. This is from a few days ago in my Slack workspace for clients, and it just continues to get carried away. But the cool thing about this is we really do have underneath anyway, hold on, let me just get this, a lovely break with the SPX of a 3666, which is kind of that line in the sand that I have for the next time it goes through that. It's going to go through it a little bit more. So I like this setup of grinding higher and volatility coming in, honestly, to kind of shake up the complacent bulls, because they just had a similar kind of awakening back in September 4th when they couldn't hedge. So you recall calls were so a bit up and expensive. What happened with Apple and the Tesla and such, and then the Qs dropped 14% in just a few days, and VIX was not a hedge. And now we have the dollar coming in. That it's starting to percolate a little bit, but that's definitely the macro that I see right now. And you have that we're waiting for it to kind of become a macro center. In other words, where the whole world is kind of like, oh. We just had, what did I put this morning? The one thing that the world is not expecting is for surging US dollar and a bull flattening US Treasury curve. So that is the transition that we're, I think, at risk with Yellen replacing Mnuchin. Am I getting like feedback on this? Is terrible. I'm not quite sure why, but there's some changes coming in less than 30 days. And even though politically that might be very much better for the people, to date, profits over people has been very good for market returns. What if political landscape also changes and it becomes more people over profits? Might be a very different risk-off scenario there as well. To the dollar, since I know you track that very, very closely, what are your thoughts on that now, since we've been watching this obviously come down to the 89.90 area? Do you think it has further to fall, or do you think it's going to do a little shimmy here and shake higher?
I think that it needed an 89 handle so that everybody could kind of call the end of the dollar. You know what I mean? Like get into the 80s, and sure enough, we saw it. We saw like tons and tons of it's going to 85, 82. All those kinds of those price markers, because 8 handle is just different than 9 handle, right? But I was sitting there going, I don't get it, because nothing's really changed. And in the longer term pictures, it really didn't make any difference. Like, 89, 60, 88, 50, 88 and a quarter, none of those make any difference to a bigger picture trade, which is that, you could be looking at 100, 110, right? And a more protracted bull. And your point about Yellen, that is definitely a volatility impacting component, right? Like,
well, she just came out and said she's a dollar bull. I have like a double back on this. I got to figure out what that is. Sorry about that. No idea why I'm getting twice of Samantha. One's enough. So go ahead.
You want me to call in? Try and call in? It might be me.
It's only intermittent. So, and it's when I speak, but I haven't changed anything. So keep going. Okay. So dollar.
Okay. So the dollar, effectively, I heard this the other day, and I thought it was a really sharp point, that if the Fed goes to these kind of socioeconomic plans, and the Treasury goes to socioeconomic plans versus profit plans, like you just mentioned, that's a pretty significant change. And that could have a significant impact on risk on assets as a whole and volatility as a whole. So like it could be the opposite spectrum. And I'm not really like, getting too far into it, because you have to see what they're actually going to do or not do with their actual fiscal commentary and their forward guidance. But if they do make a shift, the support of equities is not going to be there, right? Because it's going to be a social support. And I think that saying that is 100% guaranteed, that would be probably a little premature, but it's definitely in the 70 percentile to me that's probably coming. And then that would impact the whole perception of the Fed put, right? Is that there's been inequality created, et cetera. So, I think that you're dead spot on. And in Georgia could definitely impact that. If this goes total Democrat, then that's got a totally different repricing to an extent. And it may not be what everybody thinks, right? Because, you could have kind of inflation type situation with a hot dollar. That's happened before. And then you've got that's a negative impact on equities, right? So I don't know that there's a lot of different dynamics going on here, but the dollar seems to be bottoming. In my opinion, it may have bottomed. I'll go ahead and say that. It can definitely go lower, but the setup is there. They would need something pretty structurally impactful to push it lower in the first part of next year. And I don't buy the gold can't go higher with the dollar going higher too, because we've seen that before too. And so that's just kind of my two cents on where this stands right now, especially with the runoff in January, early part of January. And then I'm seeing the dollar kind of bottoming out. I really like the dollar right here, even on just the bounce. And I've seen more bears capitulate on the indexes this past 2 weeks, and then more people capitulate on any dollar bounce. There's just like there's really nobody left. And you're kind of starting to see that in the price too. And I think longer term, the structure just really hasn't changed much. I mean, yeah, it's gone a little bit further than most people thought, but this is, it's just been a trade where I think it was more of a pairs trade impact than anything. People were just long the euro, short the dollar. And I think I mentioned this maybe 2 weeks ago, that I was looking at DX futures and there was hardly any liquidity. And so literally there were no buyers. And it had to get to a level where you get to see the liquidity come in. And it's been pretty well bid the last 2 days. So I've seen a shift that has left very few gaps in the futures bid, which would make a difference in the sustainability of that bid. So if you don't have any gaps in the bid, and there's a lot of underlying bid in the large sizes, like 200, 300, 500, 600, 1,000 contracts, that can play into a bottom. So I'm seeing all the signs of a bottom, but I mean, it can go lower. But I'm going to side with it. Probably it's setting a bottom right here.
So I can see two arguments for lower, and I'm not quite sure why you can hear me twice. How about real quick? Let me just try something. I'm going to mute you just for a second to see if and there it stops again. All right. Anyway, the Yellen component for sure coming out and saying, wants a strong dollar. Definitely the Georgia runoffs. Not sure if Trump has any ammunition left to fire in regards to the election debate. Seems very much, beating a dead horse. But in regards to this put selling, you had seen and mentioned that put hedges had not been coming in yet, and you just started seeing them. And typically that starts to weaken a market as new long puts cause the dealers to short the deltas, and then that requires them to short the futures. So how has that changed since you're looking at the big picture market structure really for the hedges coming in, when I still see, for example, Tesla with a ginormous whale sitting out there in September, 720 calls, $220 million in premium, and it's digesting right now. It's now, sideways, if you will. Since it got included, it's down, included in the S&P, but it's not, that's not significant. What's significant is how it's going to impact SPY moving forward, because it makes up now 2%. So I hate to kind of follow the leaders, especially when Tesla's up 1,200%. But when you look at, for example, SPY hedges, do you also have to compare with Tesla hedges? I mean, do you need to go look at the leaders and see what they're doing? Because now there's a little bit of a tug of war there.
I think two different things, like Tesla. I was thinking about it, because we had talked about talking about Tesla, get that out properly. But there's a perception that Tesla is almost a neural net to an extent of that's tracking all of the drivers across the country and the world, and it's getting all of that data. And it's then kind of I think the play that everybody is thinking in the context of why that whale is there, the autonomous driving is sooner than later, and Tesla will be the inside track on autonomous driving because they have that data set and they have the tracking of all of where you're going and how fast you drive and et cetera, and it's a lot of data. So it's like a tech play to an extent. So I think that there's some fundamental or narrative perception with these plays that are really there with some of these huge trades, and they're not just structural trades. They genuinely are like, this is the next way, right, of the way that things are going to be done. I think that their inclusion into the S&P will force him to change the way he's doing business, which could have a negative impact, right? To the way he's grown what he's been doing, because he's a tech company is all about the scale and profitability is on the tail. And he's now at the tail, and he said, everybody, and he said these things like, I'm glad that, everybody worked hard to make Tesla successful, et cetera. It's almost like he knows that he's kind of at the end of the road too with the growth story, and now it's going to kind of level. And I think that the Tesla story is not dissimilar to the tech of 2000, 1999, 2000, 2001, Yahoo, where this is a changing of the guard technology, a derivative, so to speak, that ultimately does change a lot of things, but it's got to be digested, and that price is going to have to be justified. So I think that the way that the options are positioned on that, I'm going to throw, kind of set that aside, because I think that its inclusion is impactful but it's definitely going to continue to be bid until those people get shook out and wrung out, and they pay a price for their speculation, which they've had not to pay yet at all. And that's to come. The indexes.
Well, the ones who are short have had to pay a price.
Oh my Lord, those people! Like I saw some stuff the other day. It was like people were short the stock, or they were short in synthetics, and some of those losses have probably done. I have personally never shorted Tesla because you can't short that derivative perception. And a derivative is a product that creates a great change, and the perception is that, well, think of the iPhone. The iPhone creates a derivative, right, change, and then everybody puts an app on the phone. That's a second derivative. And then our behaviors change by the apps on the phone, third derivative, and so forth. They're saying that Tesla's like a phone, or a steam engine or something to that effect. And I don't, I'm not sure about that, but when people believe that or perceive that,
Perception is reality.
It's very difficult to short that perception. And then it's, he is a master narrative and a master at Elon Musk at cool.
Did you see his comments this weekend about potentially adding Bitcoin to his balance sheet?
he plays the cool card. Really,
and
really.
Dogecoin, I mean, he was all over it. Oh, it was just explosive weekend. Yeah. So he knows how to manipulate, no question. But it is a viable business model. Look at MSTR, right? Michael Saylor's company. We talked about that last on the 8th, which is kind of interesting. If just a little review here. When we were last meeting, actually on the 8th, so a few weeks ago, we were talking about QS, and inventory was not available for shorts. You were talking about how this is just a liquidity issue in many regards, where this price just keeps going up, with taking advantage of huge distortions. And then I called out on this QS where the shorts it's an EV play, couldn't cover. It's a SPAC and an EV play. And it was 50 at the time. It's now 130. And if that isn't hard enough for whoever is trying to, look forward to Christmas and is short this, today I saw 3 strikes come in of size. Each of them were about $12 million in premium, call premium, for this Friday. So another 36 million roughly came in just 3 strikes for this Friday. I mean, how to shorts, and no inventory for them to cover. Ouch. And then we had also mentioned MSTR at the time. Oh, did I not share that? Oh, no, I am. And then we had talked about MSTR, which is a fabulous long idea, from a while back. But the point is, this is the second largest holder of Bitcoin on the books, right? Their balance sheet after GBTC, which is the Bitcoin trust. So this puppy had just come back down to 280. We were talking about this. I remember it was on the 8th. They had announced that they were, going to market for $300-400 million so that they could buy some more Bitcoin. And it's breaking out. It's actually looking freakishly bullish. So this, and the call buying isn't anything because the option market isn't so liquid. But for QS, it's insane. Comments on that kind of behavior, since there's a tie here with Elon just mentioning, teasing, I should say, about adding Bitcoin to the balance sheet. Here's a case in point that's obviously worked out really well as Bitcoin tagged 24,000, and shorts that just can't get out. This continued frenzy of call buying. When does it end?
I think it's all a behavior. This has become a giant behavioral psychology situation, right? Because you're sitting there and you got no consequence for irresponsibly going long, right? So if I'm irresponsibly long and I should even hedge, I'm not hedging because I don't have to. And
hedges only cost money,
right? I don't want to blow up my my P&L, right, or take it down. And effectively then habits start forming, right? Like, because I start like, why should I do that? I'm just going to go long. And I think that is the ultimate habit set is being formed right here could lead into next year. It really could fade into next year where people continue to believe that everything's a dip to be bought. And that's consequential. I think that's consequential. Like you're seeing all the hospitals say that they're full and they're running out of capacity right now. I think that's the same type of consequence in the sense that people just don't, no, it's not, why be bearish, right? Like I'm going to be bullish. I'm bullish. We can solve all this through printing. And I think that ticket hasn't been punched yet. And those consequences haven't come full circle yet. Not to be real philosophical or anything like that. I'm actually talking tactically. It's the behavior that I'm only buying calls because why buy puts? Right? Nothing goes down. It's a joke at this point. Stocks don't go down. Stocks don't go down, right? And so my behavior is call buying. My behavior is the fund Elon. Elon's making fun of it, right? I'm just going to buy big because it's cool right now. And so, yeah, I mean, can it go further than people think? I think we've gone further than most people think already, but like it can go further, sure, right? But there's going to be shockwaves like we're seeing. And then also you get the flip side of that is the higher that it goes and the more perception that things have changed forever, the worse the comeback is when there is no liquidity to suffice the situation. And that's where we're headed. And it may be just as much that there just literally isn't any mechanics to support the situation once it gets to a certain price point. And I think that's really what I see more than anything is just like you were showing with QS, like it's a matter of what? Illiquidity and liquidity at this point. Like none of this stuff even has any fundamentals. It's a matter of how many calls, how many underlyings, and that only exists in an environment where there's not enough, there's nobody even trying to sell. And if I was selling, why am I going to sell into this? Why am I selling right like Tesla right now? People were like, I'm going to short it. I'm like, I'm not shorting it. There'll be a market making move with Tesla where you won't miss it. It'll be down 15% in 2 hours. That's your shot. That's your warning shot. And it'll break all the different levels. And then when you see that, then let it come back and then it's time to hit it. But like, it's not, I don't see that yet. All I see is corrective action in it because everybody's still too palpable. There has to be some fundamental shift in the market structure mechanics where it runs out of gas, right? Like there's just literally nobody else to take up the beggar the fool, like the greater the fool situation. And also I think that's kind of in line with like them going, oh no, there's another coronavirus strain. Yeah, because like there's a lot of different coronavirus strains, right? So like none of it's surprising, but it's an entire mentality that we have that crosses assets, and it's also socioeconomic. So I think that, and people that are buying the calls, like a lot of you see the $25,000 premium Tesla calls. These are one lots.
Yeah.
2 lots, right? I mean, that's just somebody in their house, right? Buying a call, right? That's got to change, right? Like that's going to fail really badly. Those are, and you see the people posting their accounts where they've made $1 million and so forth. And then I saw Bloomberg posting a story about a guy who made $12 million or something, or $2 million on a particular trade with Tesla. And they're saying that he's made millionaires. It's like, it reminds me of the housing situation, right? The housing bubble in 2008. That's why I say a lot of this seems to feel like that, in my opinion, right? It's
I love the comment. Just Hangin says, it's like 1999, except this time the traders are rational and the nations are crazy. Well, the traders are definitely quick. They're jumping on all kinds of momentum. And this is right now for me, and I think I mentioned this last time with some of my intermarket stuff, getting to an extremely overbought area if you're into NYSE, which is a composite, a lot of small caps underneath there. But basically, this is the vaccine rainbow from the Pfizer announcement on November 9th, which basically goes along with your 26 days in a row of just nonstop, put call ratio under whatever 0.6 point. It's been crazy. So we're coming back up into a trend line where we actually tagged and came down viciously back in January 2018. We had another tag January, February of this past year. So we're approaching a third area of digestion, which means we have been extremely overbought before. We're still rising. We haven't actually rolled over, but that's one of the tells that I'm looking at for this divergence, which can take a month or two, like it did in 2020. So it's not, you know, a slam dunk here, but it's kind of interesting. I still look at these, you know, the momentum trades, if you will, and this is going to be very, very noisy, but I'm going to show it anyway. I think this is RSP to SPY on the intermarket stuff, just from, you know, tactically speaking about trades and kind of the patience. When Trump was elected, this ratio just went straight down. Think the US steels of the world, basically think cyclicals, you know, low volatility, etc. So this stuff based here, obviously, and then just recently it started to pull back. It still looks, you know, tech is still very, very subdued relative to this big move in commodities and cyclicals and all the rest. So I still see this as a very big outlier waiting to revert, but I don't think it's done, meaning this value rotation theme that I believe, you know, yields are going to still soften. And they even had, I retweeted recently, NERP, just in case we go negative, you know, interest rates, you know, to the banks, here's a plan, you know, so it was like an official, just in case this happens. So I'm still right now looking at yields, which are just sideways, you know, no big major yield pop, but we have some softness this week as, you know, the dollar has had a little rise, actually the biggest rise on Monday morning in a long time. But this growth value rotation that peaked literally on September 4th is still rolling over. That's a big mountain to go over. So to me, tech is not a place to just be, what do you call it, lazy about. There's still big picture, a rotation in place. So I still do like some of the setups, big picture, especially next year in commodities. But yeah, we're right into that kind of level we talked about for a while coming down here, which is the dollar in this 89.90 area. It's been below, no question. It can push through it, but that was a nice volatility impulse there on Monday with a dollar higher. Stocks got a little bit of a correction, and then the stuff that was super growth kept going, right? Bounced very quickly, like they can't get enough of these SPACs. And then the rest of the market, though, has been not very cooperative. So I'm kind of curious to see, what do you have in your analysis, Jex, especially for like short squeezes? Think like the GEs of the world, the GMEs of the world that have like incredible shorts attached. I mean, US Steel already, you know, it exploded higher, but do you have anything in your, oh, I hadn't shared it. Did I not share that when I was talking about it? That's too bad. I could have sworn I had done that. All right, so sorry. This was what I was showing. All right, there was the dollar trade. Boom. Can you see that now? Can you see that, Jonathan? Can you hear me?
I can see it.
Okay,
Yeah.
good. Sorry about that. The growth value rotation. Sorry, I was showing some charts and basically forgot to hit share, so apologize. So what do you see in some of your setups in regards to short squeeze plays, things that are kind of oversold, left for dead, and have the potential to pop up with a nice rotation? Do you have anything in that regard? And I didn't ask you about this in advance, but I'm curious if you see anything, some of the stuff that's been percolating of late. Like,
are you talking about like anything from like a rotationary perspective, like that has not kind of followed through?
And also option flow, like GE, for example, is getting a lot of option flow. We talked a little bit about that last time as well. Very large amount of calls coming in, and it's certainly not a momentum player like, you know, NEO or Lemonade or any of those. So any chance you could bring that up and see what it kind of shows?
Yeah, I'm pulling it up right now. Let's
Thank
take a look at it. So this is GE right here. And just based off the quick look at GE, right? Like the flows are all real positive and have been positive since September, right? And never came back. So everything's still on the bullish side. And momentum's kind of, resetting. It lost the 50 line. So it's, it could continue lower. But the gamma exposure, right? Let me put this out of there real quick. The gamma exposure is looking like really heavy buy the dip type setup. So,
Okay.
it's buying the weakness, selling the strength. If I look at all this stuff, I don't think, like, if you look at the oil space, if you look at like XOP and XLE, a lot of these are going to come back to test this kind of main level, which is kind of what you just saw with GE, but it was a little bit more zoomed in, right, on GE. That this kind of comes back, and then does it, bounce there and keep going? I think probably pretty likely. These things have been really left for dead for almost 2 years now, and a lot of the commodity space has as a whole. I think GDX and GDXJ, they've been down the last couple of days. I think the miners really haven't participated in everything the last 6 months, right? Then they again hit another lower high across the board, and flows are kind of flat when you look at it here. But I think at the end of the day, it seems like there's kind of a commodities, because you had mentioned discussing some about the commodities, like there is a whole that what's going to happen next year. And I think that directly correlates back to the Fed conversation as well, right? Because if you think about the Fed and the Treasury, and it goes to like totally a Green Deal type thing or something to that effect, where it gets extremely perceptionally inflationary, you could see that value kind of squeeze back into this sector again. And but all these commodity sectors, they all look very, very similar, and they're in different stages of their moves. Like XLE, for example, AMLP, I know the master limited partnerships have been beat down for a long time. They all look kind of like this, right? Where they got crushed last year, have not made it all the way back up, but are just now testing again levels that were sitting there that were, this is still medium, JEX is medium, right? Buying the weakness, selling the strength on XLE, right? And you're testing the bull bear pivot and everything else. So these all look about the same. Flows are starting to leak down. So either this stuff holds. The way I look at this stuff is it holds here and goes, so hold and go, right? Or, right, they break down, which becomes much more different, right? A much more different situation. So I think depending on what you see, like you kind of got to see, there's 4 things taking place right here. You've got the dollar, you've got volatility, you got the Fed, and you have the Treasury. And the gamma stuff maybe is the 5th piece of the wheel, but that's all in single stock stuff. That's not really where these call buying traders are living. These are still more institutional and rotational type situations where you would look at IWM or these things that have been left for dead in here. But I think these setups they're pretty telling, right? Like these have broken back up over the kind of the long term. You see it didn't make it to the bull bear pivot here, and it's held here, right, on the comeback. That's pretty important, and with a positive JEX, and then money flow is still positive. So the oil and gas, AMLPs, the master limited partnerships, the mining sectors, the straight commodities. I mean, I can pull up the other commodities if you want to look at them real quick. If we got time, like you look at DBA, ag, for example, and I haven't looked at ag in a little while, so forgive me. Yeah, see, this never made it all the way back, and it's been beat down for years, right? So a question I posed to myself the other day was especially looking at metals and all that, is there some viable move here that's coming that then is real inflationary next year? Next year is really inflationary for commodities. I think that could be very realistic. There is a viable pullback or some levels held here, something the first part of next year. And it's not what everybody thinks. The dollar rallies and the commodities rally, right? We've seen that before. but that would be a lot of those two levers that I've discussed many times, the fiscal and the monetary. Are they pushing in the same direction? And what would that mean for equities, right? What does that mean for equities? I don't know enough about the 70s and the stagflation era to really draw any comparisons. And I never think two things are the same, although they can rhyme. So I can't comment on, have we seen this before? But there's some really interesting dynamics here that are, you see, do the SPACs just totally blow off and then all this kind of leaks up behind it? I'm not sure. I can't say to that, but like all these plays, like if you look at all those ones you just mentioned a second ago, they're all real positive from a JAX perspective. So they're going to the dip's going to get bought. And then you look at where these are sitting, they've gotten back above, I call this above water, right? Mm-hmm. This is the water in the swimming pool. If it's in the swimming pool, it's drowning, right? And it's shoved way down and now it's back above water, just to be really simplistic. And it's holding some serious levels. Now it did leave some price discovery behind that I think needs to be cured, but these all look, kind of constructively similar from a commodities perspective, just a real quick glance. So I'm curious to see how that shakes out the first part of next year. I am, as it said, it may sound totally crazy, I'm dollar bullish and commodities bullish. And I know that
crazy.
Totally, that might be totally outside of people's cross correlations, and they think that these things don't jive. I think there's some really mixed reflexive signals that could take place from the Fed and the Treasury. And I think vol plays into that we're seeing this week, and the dollar repositioning, that you're starting to get a feel that people are going to begin to reposition to see how that shakes out. And then you could see some really lightning to some of these trades. I think Bitcoin is like not in that bucket. For example, I think Bitcoin, in the context of these SPACs and this excessive exuberance, I don't view them as an inflationary hedge. I don't view them all that type of trade. That's all pure speculation. And that's all like Yahoo in '99. I think, the world is going to change. If I see another thing that says we're all going to be using Bitcoin to take pictures. I mean, anything that you can think of, Bitcoin's going to replace it. That of all the historical analogs, that's very much like a speculative mania. This stuff is rotational to me. And I think that there is some significant rotation that could take place in here. And books will change next year, right? People are going to position for, especially the institutional level, for long trade for the year. And what's the best trade ideas and what's the best setups for the year? The desks are going to be looking at that. I think that you got to look at the commodities pending what happens with the Fed and the Treasury in the next 6 weeks.
Well, got a comment in chat, which is you still want to be positioned in these when rates go back to zero. So there is that. It's, for me, I see one more impulse down deflationary. So agreed. I'm not an inflation bull at all. But that's, to be determined. We got to get this shift, if you will, regime shift in play. And then we'll see. And definitely the 5th and the 6th are coming up, which I think is going to add some color because it's going to lighten up a little bit of these hedges and the Santa.
Look at this chart right here, right? Like if you look at this chart with a deflationary type situation, this price, just as an example, at 1405, this is just the interbank discovery level. That's about a 10% drop right there. And if you go over to GDX or any of these other ones, like SLV looks similar, and we've talked about SLV at length, right? $26 in GDX, it's a 25% drop. I think that the deflationary kind of impulse could be, like we've seen with these doom loops, they could be very fast. And so I expect that prior to a buyable turn for the inflation trade, for what it's worth. Like, I think that we won't know until we get there how these things act at these specific levels. But I've been saying 26 for GDX for like 6 months, and people are laughing, and we're at 35, and 26 is very reasonable, and 27.50 is the volume point of control for the past several years. And if you look at a weekly view, and interesting that we're discussing this, if you look at a weekly view for GDX, for example, right, and you zoom out, this is a pretty strong kind of setup, but you could easily see that 26 and even down to 20 would still be just kind of another deflation, bout of deflation, another 25, 35%, that then is another buying opportunity, kind of what we saw back in March. But TBD is the excess speculation that's in the market right now, especially on the option side, which can just cause that doom loop to trigger, which if you look at, this is the doom loop, right? Like if you look at the impact that has, all good collateral is liquidated in a doom loop. And, all of these commodities are sometimes considered not necessarily quote unquote good collateral, but they're thrown out like a baby with the bathwater. And I think that, we got to see what that deflationary bout looks like before we can see, what are good levels to buy and not good levels to buy. But having said that, I do see a consistent theme in most of these commodities and precious metals right now. Personally, that's just my 2 cents on it.
I am more worried. So here's why. When I look at my NYSE composite on a weekly, I see euphoria, of course, just like everyone else is experiencing, but way cautionary. So let's see if I can show this here. All right, so hopefully this is a little bit viewable here. This is my NYSE composite, which you can see a trend line all the way back from, the 2007-8 top before we careened down waterfall fashion. And then this was January. I don't know if you can see my little cursor here. Jonathan, let me know if you can. Yeah, okay. So that was a very large drop back in January 2018. We hit it again in January, February 2020, and here we are again in December 2020. So this can actually take this kind of fashion and just collapse down in 2 weeks and scare the bejesus out of all the Robinhood traders and market makers that have to pile on puts. I mean, Delta hedge and short futures and all that jazz. It can also take a few weeks, months to form some type of topping pattern here. But I really, really, really have a deflation impulse because of this chart, where I look at this NYSE, which is roughly 2,000 stocks, and it's better representation than just tech and the super growth tech. It's a lot of small cap. It's a lot of medium. This to me, I don't know if you can see MACD over here. One of the reasons why I was able to short this back in January 2018 was this outlier event on MACD. Look how far extended we are. Now, I know a lot of people are like, wicked bullish. This is one of these thrust signals and all. Nope, not to me. To me, this is, an air pocket that when it gives sway, it will be dramatic. And the fact that it's lined up so well, that to me is my big concern. So deflationary impulse. Here's a little bit better look on a smaller time frame. This is a little bit tighter, but here's that kind of look. So to me, I'm definitely tight as it relates to the longs that I have. This turn in volatility to me is just waiting, and so I'm watching very, very, very closely, and saw that indication 5 days, whatever it was, 4 days before the volatility move. But when you talk about gold and GDX going down to 26, that's not hard to imagine, because when stocks sell off, so do the miners. Then they become a beautiful, opportunity to buy because they become extremely oversold. Then we have that whole impulse, which is actually Raul kind of tweeted something, and I grabbed it, Raul Powell. And I know we've got a lot of bulls here in the commodity space. Hold on one second. Oh, there I am. Would be this. When you talk about gold in inflation terms, boom, or commodities in general. I did a commodities webinar yesterday talking about platinum and palladium and oil and uranium. But here's a good kind of indication of a lot of things in commodity land can go higher in inflation terms moving forward. But this is not a close time frame. This is not something we're going to, trade like most are trading with 1 week options. But yeah, no, for me, I definitely see volatility coming in and causing this to kind of reset. And then we'll see what happens with the whole market structure. But that's
go back to your zoomed in view on that a little bit. I want to see something on this particular chart right here.
Okay, hold on. You mean the shorter duration one?
Yeah.
That?
Yeah, the crosshairs of the actual, when the MACD crosses under the pivot, like roughly the time frame of that's about the breakdown, right? Is the cross under, right? So
yes, correct.
It seems like we're starting to get those tremors and the shakes that begin to wear off the terminal kind of perspective of it, and it rotates over, and then the breakdown's the breakdown. So you're close. We're very close, right?
But we still have to form a pattern, and MACD still has to lose momentum, and et cetera. But yeah, but that's what I mean. To me, that's a scary looking kind of setup in combination with my stock bond volatility ratio, which is absolutely on lots of support, ready to just rise up. So the dollar aside might be the trigger. Something with this new political regime, if you will, across the board, right, is going to be potentially tax driven and people driven, not so much profits driven, and that's going to make the market potentially have a pause and price that in. But right now, it's not. It's not. And that's really all there is to say about that.
Yeah, I don't have anything else either at the moment that would be like, hey, I think you're seeing, like we've discussed, you're seeing it begin to exhibit positionally adjusting from the book level. So people are adjusting now after OPEX finished on Friday. Huge OPEX, people rotating to different things. You could see some institutional stuff with the Santa this week, but I think that does it continue much longer than, let's say, a period in January? I'm not sure, right? Like I'm not sure. Like you got a lot of consequence that has been pushed to the end of the tail that we're just, we just need to get to 2021 and we'll reopen, and then London recloses completely. And I'm not saying that COVID is the reason or anything like that for some sort of sell-off. I'm just saying that from a consequence perspective, we pushed everything into 2021 to deal with. Well, we're in 2021. So how are we going to deal with all this stuff? And how does the decisions that get put into motion, how do those impact this? And they start very early in January, from January on. So I would expect repositioning sooner than later. And I see positioning are changing. And that's what I would have to really assert here, is that smart money moves before they've already ledgered the books. They closed it out Friday. They're repositioning now. Why wait, right? What's a few points? It's the way you hedge your trades, going into the first part of next year, and then they'll pour more onto that next year. If we continue to see bearish positioning begin to shape up, it'll just show itself, right? And then the charts all show from commodities across the board that everything's subject to two different types of move: a correction or a full-blown doom loop, right? And we don't know that until we see the reaction at that level. So,
well, we'll talk about it at the end of the year, which is the Tuesday right after Christmas and before the New Year holiday. So thank you again for the market structure review and taking a look at some of these, I think, potential short squeezes, still some value in value, but the super growth is definitely where it's at for momentum. I hope everyone has a great holiday and safe travels, health, happiness, lots of prosperity if you're taking a break, and join us in the new year. Want to definitely remind you to sign up on YouTube for the uploaded video when it's done. Also, you can find, as you know, kind of the guest captain interview series under my website, LaDucTrading.com. And not only do we have the upcoming programs, Tuesday with Jonathan, I have a woman in trading and finance seminar series, if you will, that runs on Thursdays, but not until the new year, January 7th. So Jonathan, thank you so much. We'll touch base and next Tuesday. I hope you have a great holiday break, and thanks you for the comments as well. Sorry for some of the technical difficulties, whatever we had. We got through it. We pushed through it. That's what we do.
Yeah, no, we'll get it all straight next week too. I'll be at a desk.
All right.
I'll be back at a desk.
Safe travels, everyone. Happy holidays.
Thanks.
Bye-bye.
Happy holidays. Bye.